Hey everybody, it's that time of the week again. Simon Dixon here for Bank to the Future Live, BF Live episode 87. If you can hear us loud and clear, then please let us know in the live chat. Hopefully it's for some reason the language went all funny in our live chat in terms of like multiple languages, but if you are speaking English, then we're able to read that and let us know you can hear us okay and where you're tuning in from. So this is episode 87 episodes of Bank to the Future Live. And today we're going to be taking questions in the second half. And the topic of today is crypto-friendly banking. Really a mission I've been on for the last 2 decades in terms of sustainable banking, last 15 years in terms of how to build a bank that works, and the last decade in terms of Bitcoin and crypto and banking. So we're going to be covering that topic today. Everybody involved in crypto has a crypto banking story. Either you've had your bank account shut down, found it impossible to get a bank account for your business, or you're about to have your bank account shut down by someone that you've been using for a long time, and you're going to need to find a crypto-friendly bank. I discussed this topic, if you haven't watched it, on the What Bitcoin Did podcast with one of our portfolio company founders, Bill Barheit from Abra, one of the portfolio companies at Bank to the Future. If you're interested in that, that was a few weeks back. But this is episode 87 of Bank to the Future Live, and we're going to be focusing on the investment opportunities so that you can capitalize on the lack of crypto-friendly banking. And really, that's where our whole mission at Bank to the Future started. We believe that the future of finance looks very different from the past. I wrote the very first published book in the world to include Bitcoin, Bank to the Future, Protect Your Future Before Governments Go Bust, and shared a vision for how to bank without banks. And so really, this is a continuation. And what I'm really excited about is that finally, amongst all this crypto depression, probably right now, the markets are down quite a lot. Ultra interesting accumulation opportunities for those that are familiar with Retirement Plan B and our strategies and how to profit from bear markets in the long term without having to be a trader. All of our Retirement Plan B customers are ultra excited about these markets. So if you're feeling down, you're probably doing something wrong because this is an exciting opportunity in terms of being able to accumulate assets when everyone else is feeling down. But also the amount of innovation that happens during bear markets is always hyper accelerated. So it's very exciting, and bull markets are always fun as well. But if you're feeling down in bear markets, you're certainly doing something wrong, and you need to be listening to more episodes of Bank to the Future Live. So how do we capitalize on the opportunity of the lack of crypto-friendly banking as a topic today, and investment opportunities? And this is going to be done in 2 parts. Next week, I'm actually going to be bringing the founding team of a crypto-friendly bank that I'm going to be investing into that has a really exciting offering. I'm ultra excited about what their service is and what they're going to be bringing to market. So make sure you tune in for next week, where we're going to be actually inviting the CEO and co-founders of a new up-and-coming crypto-friendly bank by a really strong team. And the reason we're bringing them on to Bank to the Future Live is because they are doing what we love, opening up their investment opportunity, not to just the venture capitalists, not to just the VCs where it's all reserved for just a few. They're opening up their opportunity to all of our Bank to the Future investors. Make sure that you are a premium member if you want to receive 48 hours head start on that one, because we are due to mail to our priority access deal members on Monday next week. And they will be joining us this time next week on BF Live. So 2 parts. So the second half, you'll be actually getting it from somebody that's ready and live with the ultimate crypto banking solution. So can't wait for that. So really, I'm going to do this in a few parts. I might skirt around. If you would like to get your question answered, the second half of this, I'm just going to be answering your questions on Bank to the Future, crypto-friendly banking. Just head over to sli.do, Slido. You can see the link, the live link right now here. If you've got a phone, scan that QR code or use the link in the description or the email that we would have sent round, or maybe it's in the live chat. I'm sure someone will be sharing it. And you can add your questions here, and we'll try and get through as many questions as we can. We create a new board and start again each week, or just head over there. And if you want to read other people's questions, you can hit the like on their question, upvote them, and it will make its way to the top, and we'll take them in order. So, of what you're asking. Also, if you want to just go to sli.do, you can type in the hashtag box BF5, BF5. BF stands for Bank to the Future, and that should take you over here. So when I gave the big investment trends, approximately this time last year, when I was in Miami at the beginning of this, I talked about the different trends that I'm looking to invest in. And whether it relates to crypto-friendly banking, I'm looking at three big trends. Some of them are more immediate needs and starting to get traction. Others are future needs where I want to invest before they get traction. So one of the big mistakes I often see from investors is they only start investing when it becomes a trend. So they start looking now at NFTs and DeFi only once it actually happens. Whereas those that are Bank to the Future investors, we've been training our investors to be very, very long-term thinking, and they were investing in Ethereum before it was, $1 through our mining-backed securities, for example, because they were getting ahead of the trends, forecasting, and when the DeFi trend actually happens, that's the time when you can get excited. But the further ahead you can be with these trends, the longer term you can think, the more you can have life-changing amounts of wealth, as has happened for many of our investors. We've got 150,000 investors at Bank to the Future now. And many of them built their wealth because they were thinking long-term rather than short-term, trying to get involved in pump and dumps and all the stuff that everyone else in the crypto market does, that just comes in for the trends, capitulates during the crashes, and misses the whole piece. So I've been investing in three big trends, bypassing banks. So early companies on our platform were companies like Wirex that were creating innovative ways of using crypto debit cards, topping them up with Bitcoin so that you don't necessarily need a bank account. And now the Bank to the Future investors were the first investors investing in their seed round. And then they get the big valuation increases if they succeed and start doing higher pricing events. Companies like Circle was, when Circle launched on our secondary market, still available now. It was a company that people were concerned about. They were selling off their assets. They had companies like Poloniex and various other ones. Now they've got the second largest stable coin that is being integrated with Visa and various other things. And stable coins are really creating incredible ways of onboarding and offboarding into fiat, staying in crypto, and moving value around as easy as sending an email. So great to see the kind of traction they're getting. 25 billion on market cap last time I looked, more or less. And so really bypassing banks. And of course, DeFi. We had companies like Yield app on our platform that are looking at capitalizing on having traditional banking registrations and combining it with DeFi. And there's more and more opportunities that are coming our way that we'll be launching in the weeks and months ahead as well. The next is crypto-friendly banking. So going to be discussing a bit on the different options there. For those of you that need a bank that is really, you might as well go with a bank that is happy to have you as a customer, rather than you being in a scenario where you're always wondering what you should be saying to your bank. And if you say the wrong thing, you end up having no services. And I want to go a bit deeper in today on why it is, because it's a systemic problem. And I'd like to share just to educate, because once you know what the issue is, then it's a lot easier to get crypto-friendly banking just by understanding the nature of the industry and why they are so skeptical of crypto. Obviously, I'll be going more on that next week when we invite the founder and CEO of a crypto-friendly bank that's bringing an opportunity both for businesses and individual customers live and ready right now. And they did the ultimate of making the opportunity available to Bank to the Future investors. Can't wait to share that. And then obviously security tokens is the other thing. Having it where it's interoperable. Our recent experience with swapping out private equity for public equity for all of the investors that invested into Coinbase way before it was public, when it was a private company. And going through that experience has made me very all the more passionate about the need for transferring securities using blockchains and the interoperability of having security tokens that are traded as securities, but can also work in similar ways to crypto exchanges. We just recently closed the Series B to existing investors in companies like Securitize and various other plays that we've been doing in that. So in terms of bypassing banks, as I said, we've got stable coins, we've got decentralized financial products. I can't wait. There's opportunities to bring DeFi to Bitcoin. We look forward to seeing that innovation happening. We've got Bitcoin debit cards, and we've got various other mechanisms where you can plug all these together. When I first moved to Hong Kong, I didn't have a bank account for quite some time. I was literally just taking my Bitcoin as I needed to spend, topping it up onto a Bitcoin debit card. I went on CNBC in the early days I think it was 2014. The YouTube video is still on my YouTube channel, Simon Dixon, and was being roasted by CNBC for sharing them little innovations. And I pulled up my crypto debit card. Now there's lots of them. Portfolio companies like Coinbase have them, BitPay, Wirex, and various others that were part of the Bank to the Future portfolio companies. And so what I want to help people understand when trying to secure a crypto-friendly bank is just understanding the nature of the world we live today. And so regulated companies and companies that are registered, just like Bank to the Future and crypto-friendly banks, they're part of a systemic challenge. And that systemic challenge is that we now live in a world where the entire user experience and money has been destroyed through lots of regulations that companies like us and all other companies need to comply with, that ruins our relationship with our customers. But we have to do it in order to bring this service to market. And it's the same with crypto-friendly banks. I'm one of the biggest critics of banks. They own your money, they spend your money, and they create money every time they issue loans, which has all the systemic risks and has led to the world's largest regulated Ponzi scheme in history. However, there are lots of great banks out there that love to offer crypto-friendly services, but they're part of a systemic challenge. And so when you are trying to secure crypto-friendly banking, the more you understand about the challenge, the more you can get yourself in a position where you can meet some of those requirements. And of course, excuse me, and of course, the crypto-friendly bank being set up. Just going to take a quick water break. While I do that, do me a favor. Let the algorithms on YouTube give us some love. Hit the like button if you could do that while I'm drinking some water. Then we'll continue on to the crypto-friendly banking. Okay, so most people are familiar with KYC. Know Your Customer regulations means that financial institutions like us are legally required by law, by our registrations, to know our customers. And so any services that you're using that don't do that are highly likely to be at the subject of a regulatory crackdown in the future, because this is a trend that's not reversing. In fact, it's getting worse. So the more that financial institutions are every year having to know more and more and more about their customers, and many of the crypto exchanges are going to be having to go through lots and lots of different changes as Financial Action Task Force, which is basically a US regulator that is enforcing its long arm on regulators all around the world. So even if regulators don't necessarily want to do this, in order to prevent being blacklisted and sanctioned in their countries, they have to bow down to these regulations, and they're regulators of regulators and regulators of regulators of regulators. And so it creates a systemic challenge where the user experience of onboarding customers is completely ruined by these rules. But it's just the nature of it, because a few people cause problems for everybody else doing legitimate transactions. So know your customer is that process. So if you are trying to, I've spoken to people that are trying to open bank accounts and then they don't want to disclose certain information, they're a bit secretive about certain information, then these trends are getting worse. There's things called source of funds. Now, source of funds is where crypto exchanges, banks, brokers are legally required by law to know where all money came from. And the exact source of it, what bank it came from, whether it came from a crypto exchange. And so the user experience of crypto at these exchanges and financial institutions is getting slower and slower and worse, and trying to integrate it into something that looks very much similar like banking. And financial technology companies are coming along and trying to make that process a bit more frictionless using technology in order to achieve those goals. But source of funds is something that every crypto-friendly bank needs to know where those funds came from. So if you've generated significant wealth in crypto and then you need to spend it through the banking system, they're going to ask you exactly where that money came from, how you achieved it, and the exact source of the money that is being used to make that transaction. Now, I'm not talking about small transactions. I'm talking about transactions, large transactions, or any transaction above $10,000 or more is going to be brought into this regime. The other is source of wealth. So not only will you need to disclose where the funds came from, but you also need to explain and have a story and give documented evidence of how you actually accumulated that wealth. So we used to live in a day and age where you could actually go to your bank, you could deposit some money and you could spend that money and it felt like it was yours, even though it was the bank's. But now, due to these regulations, you have to explain everything about where the money came from, how the money was, the exact source of it, and how the wealth was achieved. And so if you're interacting with crypto-friendly banks, what they're doing is they're implementing processes to use technology to make these services easier, whereas the large banks are just saying, well, screw it, we can't be bothered to do that. It's too complicated. We'll just shut the accounts down. The other thing that needs to happen by law, and there's no way around that, is transaction monitoring, making sure that transactions are being monitored if they're heading to illicit markets, if they're going to places where they're not meant to be going, and systems and controls need to be in place with crypto-friendly banks, which is why even when the bank tries to deliver the perfect user experience, they're having to contact you, ask you questions, get in the way of transactions, and this is part of the transaction monitoring requirements. They've also got to put risk ratings, so they have to gather lots of information so that they can attach a risk score to you. They have to run you through lists, PEP, sanctions, all sorts of stuff, see if you're politically exposed, if you're connected to a political affiliation, whether you're from or born in the wrong place according to some type of list. And this causes lots of friction and is killing the user experience of using banks. And also driving people to wanting to find more better technical solutions. So if you want to use a crypto-friendly bank, it's about understanding those requirements and making sure that you've got all of the documented evidence, all of the trails. They'll ask you for tax numbers, proof of all these types of things. And that is the challenge, that the user experience of money has been ruined, and why we're having so much innovation in this sector to try and find better solutions to solve those problems. It's the main reason why banks will just simply close your account, because doing all that when the proceeds came from a crypto transaction means that they have to do lots of work, they have to hire lots of people, they have to do lots of investigations, and there's no feasible model for monetizing that. Plus, the fact that the crypto industry is creating competition in banking doesn't help either in terms of their appetite to want to work. So this has caused this systemic problem. And crypto-friendly banks come along and say, we'd like to deal with that. And they say, well, but the cost of doing this is so expensive, so we can only deal with high net worth customers. So the people that are not high net worth yet, And crypto created so many high net worths, and Bank to the Future has had so many investors that have become high net worths as a result of building portfolios through the platform, that they are serviced by private banks and companies that are, less public about their affiliations. But those at the lower level that don't have significant wealth are struggling to get crypto-friendly banks, getting their accounts shut down, and finding these immense challenges. And that's why it's because of all these regulations that banks, even if they want to service you, they just think there's no profitable, feasible model of making this happen. Plus, if they're the large, too big to fail clearing banks and they own your money, they spend your money, they don't need it. They don't need your deposits. They can just create money whenever they choose based upon loans. And so they're into different type of business models now that we have created the world's largest regulated Ponzi scheme in the traditional financial system. It's a lot harder to monitor, so it creates all these problems. So what types of banks are crypto-friendly banks? Well, you've either got essentially a few. You've got crypto-friendly banks, i.e. banks that are announcing we'd like to work with companies. There's a few of those. They tend to stay quiet behind the scenes because they sit on top of another bank. And if they lose clearing through their bank, they end up being able to not provide that service anymore. And that sits on a central bank. And so this is all systemic challenge. You then have commercial or retail banks that are dealing with companies, financial technology, fintech alternatives, and there's lots of different companies. So the types of companies that are trying to do integrations, you've got companies like Revolut, but again, you still got to meet all these requirements. So they've created debit cards to integrate seamlessly with crypto, and you can get a bank account with that as well. But also we're starting to see that they are skeptical. They're not providing certain business customers as well. Then you've got solutions which skirt around, like Wirex we talked about. And then you've got banks like Simple Bank and Fidor, which were very early in supporting companies like Kraken, and other portfolio companies that needed banking solutions early on in the crypto banks. You got things like AnyBank, USAA. They were early investors in Coinbase, and so they started to make a play into the scene. And then you've got things like Change Bank. What else have I got on my list? LHV Bank. And of course, companies like exchanges are now becoming banks. So that's an ultra exciting innovation and development. So Kraken, one of our portfolio companies, they are now launching Kraken Bank. And we're excited to see that. But these things take time. They tend to roll out services to limited sets of customers in certain jurisdictions, depending on that. So you got to wait for a little bit of time. And there are a lot of private banks that I'd love to mention in this video, but they don't want me to mention because they're happy to work with high net worth private clients, but they don't want to ruin their clearing because they don't want to announce it and then publicly be known for those certain things. So that's one of the systemic problems. So that helps you understand some of the bank risks and the types of companies. And next week, we've been looking for a company for a long time that is able to offer both individual and business accounts and have certain solutions and be able to work with companies like Bank to the Future and many of our portfolio companies. And we've been through a lot of them over the time. We've had a lot of different accounts. We've hedged our bets. You got merchant processors, you got custodians, you got trusts, you got various other things. And so we're really excited about seeing these solutions come into market. One of our other portfolio companies is our partner that we use at Bank to the Future, First Digital Trust. They did a funding round on our platform, and we've been working with them on our retirement plan B solution as well, which is going into closed beta next week. And all of the retirement plan B online coaching program graduates, we're expecting to send you the next email and update and bunch of videos out this Friday. So look forward to delivering that to you if you're one of the 500 people on the Retirement Plan B online coaching program. What else have I got to you? So remember that All of when you're dealing with legally too big to fail clearing banks, which means that they have direct accounts at the central bank, all money held with them means that they own that money. It's legally no longer yours. And so I like to use trust companies like First Digital Trust as well. They can be somewhat more expensive to set up. There's a bit of an investment. It's not free banking. There's a reason for that. Remember the old phrase, if a service is free, you are the product. Same with banks. If banking is offering you a free service, it's because you are the product. They take your money and they're lending it and they're taking risk with that money. With a trust, you have to pay a premium, but the money is held in your title and they can't use it. I'm going to take a quick water break. While I'm doing that, if you're enjoying this content, make sure you hit this like button and share it with somebody. We really appreciate that. Okay, so always remember that with the banks. So that's why we like trust structures at Retirement Plan B when we're launching our solutions for those that want to build a retirement plan. It comes with a trust and custody and segregation so that you don't have to deal with many of these shenanigans because they're not segregated accounts. They're not legally titled to the owner. And your deposits are rehypothecated many times over. What's their answer to it? Insurance. Well, remember, the insurance schemes don't have the deposits to cover that. So if you take an insurance scheme like FDIC, which is where the gold standard, as it were, that you see on the bottom of every bank, we are FDIC insured. Remember, they've only got 1% of your deposits. They rely upon a similar model. They want only one too big to fail bank to go bust at a time. If more than one happens, you end up in the 2007 scenario where you have to rely upon bail-ins and taxpayers' money and inflation, and you end up paying it through hidden taxes and stuff. So remember those when they say the bank insurance schemes. They're insuring trillions and they've only got a few billion on in order to cover that. So always remember that. And then they end up having these types of systems. So, and remember, we've even got case studies of these systems needing bailing out. Before FDIC, the reason that FDIC was created, we had FSLIC, the Federal Savings and Loan version of FDIC. That had to be bailed out and repackaged into FDIC when it got itself in trouble in the savings and loans crisis. And so the taxpayer ended up paying for that anyway. So don't be fooled into thinking that. And obviously, if you're familiar with my content, you know that central bank digital currencies are the one that is going to be used in my perspective of bailing out the financial system. And so that's those types of things. So as I said, there's three main trends that we're looking at investing in. Ways of bypassing the banks, which is DeFi, debit cards, stable coins and companies around that. And the second is looking at the opportunities of crypto-friendly banking. And we're going to continue that piece next week when we have the CEO and founder of an awesome crypto-friendly bank that we're going to be looking deeply into and working with and launching their funding round on Bank to the Future. I'll also be making an investment in that company as well because this is a bee in my bonnet for 20 years now. And the technology all coming together to have the crypto-friendly bank built upon structures, and all of these different services that are now coming together. We did the funding round for Celsius, which is taking all of people that want to collateralize their crypto, lock some of it up, receive a loan so that they can spend the money that goes down in value and keep the money that long term they anticipate will go up in value, and being able to accumulate at these corrections, and hopefully not receiving any of those margin loans because they are very significantly over collateralized and people are able to do that. But that is one of the risks when you're lending against your Bitcoin. Obviously, when the market has big corrections like we've experienced, then you always have the risk that those crypto assets will be sold at the time when you don't want them to be sold, creating taxable events, maybe, depending on your situation, unless you've obviously invested in asset protection schemes and some of the things that help you support that. So that's all I've got for you in terms of the notes. So I now think we're moving into the second half of the show. How are we doing? We're at halfway mark exactly. And obviously the third trend, the security token ones as well, being able to have some of these services happening in the securities market as well. And we'll be bringing more opportunities at Bank to the Future for that. So I'm going to continue the rest of the content next week, so make sure you tune in. If you're not a subscriber to the Bank to the Future YouTube channel, make sure you hit that subscribe button, hit the bell symbol, hit all, and YouTube will send you an email when we go live next week. If you are a Bank to the Future investor, the onboarding time, we had a 2-week waiting list for opening new accounts, completely oversubscribed. That time has gone down a bit right now. We have managed to double the capacity of the team to onboard new customers, but make sure you get those accounts open early to avoid disappointment. And also with all the returns that have been paying out, the time frame in terms of getting these payments, doing all the checks that we talked about in this video that we're legally required to do, is reducing those time frames now. So great to see that and see that. But as I said, these legal requirements are getting harsher rather than better at the moment in terms of that. So let's move over to the Slido board. I'm just going to pull up my screen so I can see as well what Azad is sharing. So Azad, hopefully we got a bunch of questions that have come in, and we got 30 minutes to get through as many as we can. What's the first question? I can't hear you. You might be on mute right now.
Hi, can you hear me?
Got you now.
Hi there, sorry about that. Yeah, the question is, hi Simon, any good news about crypto-friendly BnkToTheFuture?
BnkToTheFuture, they are going through a restructuring. Can't talk about it publicly. But they sent out a notice, was sent out to all investors. They are going through, they've completed, I believe, the restructuring. And so you can, I think that they'll be posting an update. I think everything has moved forward with that. But yeah, that's all confidential as well. So they've gone through their restructuring. Yeah, make sure you follow the investor zone for that. Can't talk too publicly about it without them giving us permission.
Okay, next question is, so I think you mentioned this on Kaiser Report, but here it is. The PM of El Salvador announcing BTC as legal tender. If 1% of it is invested in El Salvador, that would increase our GDP by 25%. Also Bitcoin to get 10 million new users. Your thoughts?
Yeah, so I gave an update. Follow me on Twitter at Simon Dixon Twit, TWITT. And I gave a dedicated video on the El Salvador announcement and what it means, legal tender, what all the consequences are. I was also on Kaiser Report, but that was before the El Salvador announcement. That was pre-recorded before they announced that in Miami. And I also gave you some trivia history about the other countries that have been looking at the legal tender argument and the dirty little secret of the Bank of England and how that all played out in that story. So if you'd like to follow that, I gave a quick update on Twitter during my public commitment to health. I think it was maybe my public commitment to health number 87 or 88. You need to get the Twitter video on that. But great news, and I covered a dedicated video on that, a short one as well, so you can watch it in under 5 to 10 minutes long or so.
Okay. Any marketing plans, Simon? Your company has an incredible track record and has created real millionaires, but very few people out there really know about Bank to the Future. Everyone in CT should know about you and Bank to the Future. Thanks.
Yeah, so because we are a securities business, we are restricted in terms of what marketing we can do. So what we launched was our mass appeal product, which is Retirement Plan B. And so we launched it into a closed beta with 500 clients. And we'll be taking on the second group of people. And then we are working on some of our partnerships right now to be able to launch retirement plans to a very, very wide scale audience. We've been somewhat 2 years in regulatory planning for our retirement plan B portfolio builder product in terms of getting all the pieces together. And now we're about to launch out in closed beta. So in terms of just pitching securities, we agree. We think everyone should know about it. But there's very restrictions in terms of what you can actually market and how you can market. And so we launched these products so that we could have things which we're able to help people understand a bit more about some of the things that we've done. So I really appreciate that. But we also just focus on our customers. At the moment, we need to increase our capacity to be able to onboard more customers. We have far more customers than we can handle investors at the moment. We've got a lot of really great clients. We're way more selective. We only accept 1% of the applications that apply for funding on our platform. And I hope you can see with all of the companies and unicorns that we produced, while some of them have gone bust, we have a very good track record in terms of some of the companies that have done very well for our investors. So that's the answer to that. Restricted in terms of marketing, need to increase capacity, and we're making a lot of shifts at the moment. The retirement plan B is the product that is less restrictive, that gives us the ability to be a bit more creative with our marketing, like we were with the free video series that still today people love, got a lot of value out of, and it helps people educate, become better investors. And when they become better investors and they're more longer term focused, then Bank to the Future was built for those people rather than the short-term speculators that are subject to, the whims and ups and downs of the markets.
Is the crypto bank you're bringing in next week fundraising at a seed or Series A round of funding?
That's an interesting question. So they have secured some funding. I'd say the seed was probably friends and family, and the founders invested their own funds, I believe. I'll get more details when we ask them next week. But this is their first major funding round. So for me, the valuation relative to other crypto-friendly banks makes it, for me, a very exciting investment. But you have to do your own research, and you have to check out whether it's appropriate for you if you're a qualifying investor. There. So maybe we'd call it a Series A, maybe we called it a seed. I think it's their first funding round with outside investors, but they are already significantly far along with their project.
Okay, just realized I'm no longer a premium member since I moved my BFT from the BF wallet to Exodus. I presume to be a premium member, the tokens now must be held on the platform since the wallet is being phased out.
Yes, so we are no longer supporting the BF wallet. Still works, but we don't want anyone to sign up for it because it's not a. We originally created the BF wallet when we wanted to move into the security token marketplace. We decided to make a strategic move to focus on investors and retirement plans. And so we had to shelf our move into the security token side. And so the BF wallet was really causing us, more resources being sucked out of where we want to focus. So we decided to stop promoting that. It is a self-custodial wallet, so you still own the private key. But if you want to, for example, our support team have been helping people migrate their private key over to a wallet with a great team that are really focused on their wallet, which is Exodus, or any others that you want to use. But Exodus, we've been supporting people with, then you can hold them on Exodus. But yes, if you want to be a premium member, then make sure you transfer at least 10,000 Bank to the Future tokens to the fund section of your account on BnkToTheFuture.com. As long as you lock them up, you'll be a premium member, you'll get priority notifications. If you put 100,000 on there, Then you also get 1% rewards kickback as you build your portfolio and invest in primary offerings through the platform. If you want to put more on there, then you can pay your secondary market trading fees using the Bank to the Future tokens, which most investors do when they use the secondary market. That has been creating a lot of demand recently for the Bank to the Future tokens. But yes, if you're holding them on Exodus, you're not going to be a premium member. You need to deposit at least 10,000 to your BnkToTheFuture.com account, log in, hit funds, go to the BF wallet, hit manage, hit deposit, you're there. Also, if you don't have any, you can buy up 10,000 or 100,000 to become a premium member on the platform. Or of course, you can use a crypto exchange that supports the buying and selling of Bank to the Future tokens.
All right, next question is from David. Simon, what do you think about the mad craze going on with the garage backyard miners? Some of them have YouTube channels spiking large monthly profit claims. Do you think it's worthwhile putting some rigs up in the garage to mine some coins?
Personally, I would do Bitcoin mining as a hobbyist. But personally, so in the early days, we did, Bitcoin Capital invested significant resources in mining, paid out thousands and thousands of Bitcoin, over 1,000 Bitcoin to our investors. And that did very well. But since then, you got to be really good at what you're doing. It's very institutionalized. And in most cases, it's just simply buying Bitcoin in most cases is better than mining Bitcoin. Unless you have a significant edge, and it's a very institutionalized business right now. Then if you're looking outside of the Bitcoin market, don't really want to comment too much. Obviously Ethereum's moving to proof of stake, and proof of stake is the big trend. So in terms of proof of work coins, there is only really Bitcoin. There are other things you can play around with, but you're moving further and further down the risk curve. So personally, I don't believe, that investing in mining, unless you're investing in mining companies that do have an edge. So we're currently going through, we co-invested with Peter Thiel on the platform in layer one technology. So just bringing mining technology with the co-founder of Genesis Mining. And that's going through a bit of a restructuring. So we're waiting for some further announcements if you're one of those investors. So I prefer investing in the companies that are pros at it, having equity in their companies. So it's more of a longer term play. But if I want exposure to Bitcoin, I'd be investing in Bitcoin itself rather than some kind of mining product. That's my personal belief. Not financial advice, obviously. You're going to have to make your own decisions there and do your own analysis.
What do you make of the global tax for corporations? Will the global personal tax follow?
So yes, tax is going up. Talked about it in the book, Bank to the Future, Protect Your Future Before Governments Go Bust, where I was guiding people that tax is only going in one direction globally. And therefore you need to use the strategies of the rich and wealthy, and do what they're doing. And so part of retirement plan B is asset protection. And certainly something people need to consider. Many people say, well, my Bitcoin's not worth that much, but look what happens. Those that are long-term thinking, they end up being worth a significant amount. So tax is a very boring subject, but throughout my 90-day challenge, if you want a 90-day challenge, go back to my YouTube, start on day 1 where you saw a big fat Simon Dixon, go to day 90 where I'm starting to look a bit trimmer and have a bit more energy. But I covered tax and a lot of subjects there quite a lot as well. If you're interested, that's on my Twitter at Simon Dixon Twit. And also consider the Retirement Plan B program where we're helping really efficient retirement planning and asset protection and various other things. So is it coming to, yes, a tax of everything is going up. So there's no doubt about it. They'll go for a hidden tax or inflation. And then when they need more direct means, they'll go to direct taxes. Crypto market, as it goes through trillions and beyond, then there's a lot for tax authorities to be interested in.
Charlie asks, hello, Simon. Which banks or building societies would you recommend within the UK? I've used Lloyds Bank for years with multiple exchanges. I stay below a £10,000 deposit withdrawal threshold, but think I should have a backup just in case. Thanks.
Yeah, I really think you might want to start looking at who will be launching on Bank to the Future next week. UK is one of the worst in the world for crypto-friendly banking because it's a ginormous monopoly of four banks that clear into the Bank of England, and all other banks sit on top of those 4 to 5 banks. But they had a big regime around that I was lobbying for before Bitcoin, in order to open up API-based banking and access before the word challenger bank came along. That was some of the early work, but there are ones, but you can start looking at some of the challenger banks like Revolut and Wirex services that we were talking about. They service in the UK. I think actually Wirex had some challenges in the UK. I haven't stayed up to date with that one. But the UK is one of those jurisdictions that's very challenging with crypto-friendly banks. So often you have to look outside of the UK and look at companies that are willing to service a global audience.
Okay. Laura asks, are you aware of crypto-friendly banks in Germany and banks that are unfriendly towards it?
So almost every bank is unfriendly. And then you have a few crypto-friendly banks. I know Fidor is a German bank, but most of the time you have to look outside your jurisdiction to more globally minded digital banks in the crypto-friendly banking space. You'll enjoy next week.
Samuel asks, do you think it makes sense to take a collateralized loan with Celsius using, say, Bitcoin to get funds ready for the Celsius second equity round?
You're moving into financial advice there right now. I could never give such an advice without, so I'll put my financial advisor hat on firstly. I did do all my financial advisory qualifications a long time ago, but I'm not a registered financial advisor. If I were a registered financial advisor, I'd need to sit down with you and complete a questionnaire and find out your personal financial situation, your obligations, your liabilities, your assets, and really you'd come up with a plan based upon that. Then you just decide how much you're allocating to your investment accounts from your savings accounts and your security accounts. And then you start to develop what types of products that you would do. So then if you want to have a strategy that is tax efficient in order to collateralize your crypto and then take on a loan, that should be very cautiously done, understanding the tax consequences for that. It is a very tax efficient way in certain jurisdictions, not tax advice, and certain circumstances to lend rather than sell. And then if you want to invest that into a company, you need to understand the consequences of that. So there's a couple of solutions. At Retirement Plan B, we created all the tools and resources for you to advise yourself by creating your own assets and liabilities and balance sheets and putting together investment strategies and plans. And then you could decide whether that makes sense to you. Or you actually do need to get a financial advisor, start planning some of that. I personally see value in that, but many people have to hit a certain level of wealth till they start considering those things. But I don't want to give you a cop-out answer because really the answer to that really depends upon your financial goals, your assets, your liabilities, and that's not something you can give us. There's very danger in generic advice around that. Another thing you can do is really check out Retirement Plan B free video series. We gave 4 videos on how I'm investing now. And really implementing that as part of your strategy. That's the type of thing that will help you think about those things. And then our next round of Retirement Plan B coaching customers, you can put yourself on the waiting list. We've got a big waiting list of people looking for round 2. But we give you all the tools and the spreadsheets. This is the page for the waiting list. Is retirementplanb.com/sign_up, I believe. You can put yourself in the waiting list there. And one of the modules is giving you all the tools to really just think long term, put together an actual plan, stick to that plan, and you really be able to empower yourself to make those decisions rather than always relying on other people. So there is a set of circumstance where it might make sense to you to not sell your Bitcoin, borrow that money in depreciating assets and put it into assets that might be worth more in the future. But you need to understand your risk profile, your risk appetite, and what really happens when those things go wrong, because investing in private equity is really high risk, high return, long term. And so if you have capital needs in the meantime, then it may not make sense in your circumstance. To give you a few things to think about.
Jim asks, we now have a Bitcoin-friendly nation in El Salvador. Any thoughts on which nation is next? Do you see the domino effect, or will the central banks flex their muscles to stop the adoption?
All of the above. I see lots more coming. We've seen them coming in the past. This has been an ongoing conversation since Isle of Man supported Bitcoin in 2014, and the central banks flexed their muscle, and other countries like Malta followed. And it's a constant currency war, regulatory war, and one of the most interesting times in financial history. I think we've already seen Panama and some other countries follow and announce that they're going to be having Bitcoin as legal tender. And it's just great to see this conversation move forward. But we have seen these conversations before, but never actually the execution of legal tender. So that is a significant development. But yes, central banks, clearers, regulators, they're all flex their muscles there, but they're all reaching a stage where they're kind of, how do we live with this? This thing ain't going away. We either get gobbled up or we decide to go with it. And so that kind of critical mass is happening right now.
Okay, question from Sandeep. People say yours is a crowded platform and difficult to exist. What's your take on this?
Not quite sure what you mean by crowded platform and difficult to exist. So BnkToTheFuture.com has a big waiting list for customers. There's certainly that, with the largest community of people that have been building a portfolio of equity in financial technology and crypto companies. There are other people that offer online investment platforms and other types of things. But if you watch previous videos, I'm not aware of any platform that's had 9 unicorns and where we specialize just in the financial technology area. We welcome, we fund competition. So whenever platforms come along, we try and invest in them, support them. Companies like Securitize doing innovation in security tokens. Companies like Start Engine using equity crowdfunding based upon some of the early work we did, changing laws and regulations in the early days. We put them in our portfolio. We're trying to support this industry. We're not scared of competition. We like to embrace competition, fund them, support them, work together, see how we can collaborate. There is a wealth of opportunity to reinvent every single financial product out there. And we just want to see that change happen. I wrote about it in the book, Bank to the Future, over a decade ago, where I talked about the 7 hugely disruptive technologies. And that led to us creating BnkToTheFuture.com so that we could just simply fund all this technology, fund all this innovation. It created a bit of a wave that led to the growth of our industry. And by the way, you don't have to buy this from Amazon. If you're looking at the screenshot there, get a free digital copy of this book. Many of the forecasts are relevant today like they were back then. And you can get yourself a digital copy there completely free. So you don't even have to buy it on Amazon unless you want the hard copy. The URL for that is, I think, retirementplanb.com/book.
Yeah, that's correct. Question from Leslie. Hi, Simon. Someone once asked how you would fix the economy. You said your method wouldn't be popular. Could you elaborate on that, as we didn't get time for the answer?
Don't really remember, but I gave my roadmap for different scenarios in Bank to the Future, Protect Your Future Before Governments Go Bust. But we are at a time and stage right now where central bank digital currencies are pretty much the only way of maintaining the status quo without massive destruction to people's wealth. The other is that you need to have deflation. You need to increase interest rates. You need to allow the markets to move in a more free market style, and that's going to hurt a lot of people and destroy a lot of people's wealth, because it leads to the correction of real estate markets. It means that real estate markets need to become more affordable relative to people's wages. It means that we need asset price deflation. And the governments are just simply not going to do that. So the only thing they are going to do is switch from free market capitalism, now they've destroyed it, to larger governments, more of a socialist ideal, and a larger government that gets involved in taxes higher. And the only way to move to sustainability in the banking system at this stage, rather than destroy it, is to allow banks to go bust, switch to central bank digital currency, and have a larger and larger government, because they're not going to reverse these trends. They're not moving back to mechanisms for controlling how much fiat currency is created. And I do believe that we only need one money supply, M. We should not create money as debt. And I talked about that, and that's really the premise of where I think central bank digital currencies are going. But in order to have a nice system, you need to have competing systems, and that's why Bitcoin is our world's best shot at ever achieving digital hard sound money. And financial technology companies that build on top of these central bank digital currencies and systems that exist outside the traditional financial system. And that's exactly where we're going.
Hi, Simon. You always refer to exchanges as money machine. Any upcoming deals in that field? Thanks.
Yeah, we have exchanges that are live on our platform 24/7. So if you're not from the US and you head over to our secondary market, then you're able to purchase shares in crypto exchanges. And those are some of the more established players. And in our primary market side, we get lots of exchanges. A bit of a crowded space right now, but there's lots of interesting mergers and acquisition forecasts that I'm making around the crypto exchange space. So the secondary market is the best place to look for that, and those are trading those are be able to purchase, if you're not from the US, 24/7. If you are from the US, then you need to wait for a primary market offering. And we are always looking at trying to leverage and flex our muscles with exchanges. They don't often need money, but if they like having their customers as shareholders, much like Kraken did and some of our other portfolio companies, then we're always looking to bring those opportunities to our investors.
Question from Dory. It was said that we could fund the Celsius second equity with the Cel token. Will you extend the transfer time of the Cel token to Bank to the Future? And Celsius app wallet has security features and it take some time to withdraw. Thank you.
Can't give you an answer right now. That would be up to the product team and the tech team to resolve those issues. Thank you very much for bringing that to our attention. What I will do is, Azad, if you could copy and paste that question and share it with the relevant teams, then they can make sure that that's addressed in considering the product offering. But I don't have any details to share on Cel or anything like that. We're still waiting, and I think there's several meetings coming up with the Celsius team so that we can drive those conversations to the next stage. We don't have set anything to share at this stage.
Okay, room for one more question?
Yeah, how are we doing for time? Yep. Yeah, okay, we're on time. So yeah, let's do one more then.
Okay, could you disclose the number of investors holding 10,000 plus BF token on the platform at the moment?
Good question. I actually don't know the answer to that. So I'd have to pull out some of the numbers. But yeah, I'm sure we can look at adding some layers of transparency and share some stats. I'll try and get those for you. But yeah, don't have the number there. And some of them are holding it in their private wallets as well. So maybe some kind of blockchain analysis. But yeah, in terms of how many are holding them on the platform, Don't see any big secret there, just don't have the number for you right now. So thank you very much, everybody, for those questions. Azad, how many do you know how many we had unanswered there?
We've got 1, 2, 3, 4, 5, 6, 7, 8 unanswered questions.
Okay, so that's pretty well going. We managed to get through a lot of questions in 30 minutes. And thank you, everybody, for asking those questions. We'll be back this time next week with part 2 of our crypto-friendly banking series. And it's going to be a different format. It's where we're going to be inviting the CEO and co-founder and maybe more of the founding team for one of the crypto-friendly banks that is going to be launching on our platform. And we'll set up the Slido board so you can ask some of your questions about their service offering, and we can understand more about their funding round. But full disclosure, I am going to be investing in that company. And so I need to disclose that, as I do with many companies on Bank to the Future. I try and disclose wherever that happens. So as always, we are on, that's going to do it for episode 87 of Bank to the Future Live. If you enjoyed this, do us a favor, like this, share this with anyone that's interested in investing in this industry. And we will see you this time next week for episode 88 of Bank to the Future Live. Peace.